So this video is just a quick example how to actually just go step by step from nothing to actually be able to read a chart, to read the market trend, and actually be able to take a trade. So first things first, you have to understand the weekly and the daily will determine the move. The weekly and the daily will determine where the market is going to head this week, and if you know where it is going to head for this week, then you can scale down and find on the daily which day during the week that move might happen. And then on the 4 hour, it determines when the price is about to reverse. Those three time frames will determine everything about the whole trade. Everything you were planning to do is between those three time frames. Then you just have to figure out which time frame fits you the best. 1 hour, 30 minutes. I just do a mix of both to find your entry, because it's better to know the direction and when the market is slowed down, and then just scale down and zoom in and find the entry on the lower time frame so you can have a quicker result, a sharper entry. So first things first, you go to the weekly time frame. You need to identify, based of what I've taught in other videos and inside my community and in my live stream on Kick, because yes, I do live streams on Kick, and here on my YouTube videos and on my social media, everywhere I'm teaching you how to properly read the market trend. And most of you will just see this move right here, that price is going upwards, and you probably think that that is a very bullish market or it's a bullish move, which is not the case. The whole sauce and the whole secret in this one is to actually see where the structure points stand for. This is the lower high and this is the lower low. Everything in between is just noise. The whole market trend is here, and especially in those high time frames, this is very important. So here, let's take it a little bit back. Clearly, we have higher low, higher high. We are bullish. Then market structure breaks, so we go bearish, lower low, lower high. So we know market trend on the weekly time frame is bearish. Then if you scroll a little bit on the left, you see that price never really been like more than this zone, or these prices up here, and stay there for a longer period of time. The last time that price was actually there and been traded a lot was back in 2023. Here, price always goes up, goes down, goes up, goes down. It went here just for a couple of weeks and then just drop again dramatically. So that's an add-on confluence, and also the bearish market shift. So all that identifies and tells you that the price is sooner or later going to go to the downside. So knowing that, you just have to see and understand the story. Weekly tells you a story. So what the weekly tells me personally right now, price made the new lower low, then it had the reaction, and now it slowly starts to getting ready to push for a new lower low and a new lower high to be created. Now we are above the EMA, so if we're just waiting, of course, technically the week just started, but if this week finishes and closes below the EMA and around these points right here, that means that either the next or the week after that, we're gonna create the new lower low. Again, that's a story that the market trend is telling you based on all the confluences I just told you before. So once you have this story, then the only thing you have to do is trying to find a zone again in those big time frames, because the bigger the time frame, the more valid and stronger the zone. You check quickly on the weekly time frame. If you can find something, don't even bother, even though you can. If you see right there, I can just drag it and you can see that price, whenever it touches the zone, it has a reaction. So it touched, it went up, touched, it went up, and touched, it went down. So that's a very, and here you you can say that. So here I had it as daily only, but now I can add the weekly time frame plus the daily time frame, because it's a zone in both time frames, and make it even stronger. Then I have to scale down on the daily time frame and check what is the market trend here on the daily time frame. it is bullish. As you can see here, this is the higher low and this is the higher high. So all that is just noise. But then you will ask me, but why then you want to sell, and why you? Yes, the reason I'm selling is because the weekly time frame has so many confluences that it is very strong. It's bearish. It's at the zone that it always touches and has a reaction, and also at the very high point, which price always tends to have a reaction. Then the daily has kept to keep on going to be bullish, but the whole price action shows that the price is about to reverse. Yes, it might be more risky trade because not both weekly and daily are in sync, but having weekly telling you the biggest story, daily is just gonna follow at the end eventually. So once you have weekly and daily telling you the story you want to find out, then the only thing you have to do is, in the zone you've marked on the weekly and the daily, use the 4-hour time frame to tell you when the price is it's slowing down and it's about to reverse. So this candlestick again is just a market open candlestick, huge aggressive liquidity grab, I would say, or just because it's bank holiday as well. But in general, when price moves here, you just wait for the 4-hour to give you signs like that price is about to reverse. That's what 4-hour works for. You need to use it as identify if something is slowing down for you to find an entry on the 30 minutes or 1-hour time frame. That's a job that the 4-hour does for you. It identifies when the market is slowing down based on the zones you figured out on the weekly and the daily. 4-hour is there to give you the sign that price is about to reverse. So then it tells you to slow down and go to lower time frames, scale down and find an entry. So using those three here, every single one of them for their own use, is going to change the whole perspective you have about trading. Trading is much more simpler than what you think. It requires not so many indicators, not so many hours in front of the screen. You just need to find the right setup and the right trading strategy, amplify it with discipline, which is very hard, and then everything else becomes so much more simple if you actually follow your rules. Trading is not so hard as you think it is. And if you want to see more of those, click the like, subscribe to my channel. That helps me a lot and helps me to make more videos like that. Share this video for others to see it, so that also helps me a lot. Then inside my communities, I share everything for free before I take a trade, the moment I'm taking the trade, and then after. I'm going 100% fully transparent, and then I'm having 2 different options for you to start learning about day trading. The one is a full one-on-one mentorship, which I'm teaching you one-on-one live videos plus recorded videos to repeat the lessons. And then I have another option for most of you, so it can be affordable for everyone. So by subscribing to my Kick channel, that gives you the opportunity to actually learn my strategy. Just with $5 a month, you get the chance to learn my full strategy, but just with recorded videos and not the one-on-one. But then you get the chance to follow me and watch my live on Kick and ask me every question you have. So basically, it's a way to recover the one-on-one sessions. I'm trying to do everything to help everyone growth. Help me growth as well, and let's grow everything and build the biggest community ever together. So if you want to see more like that, you know what to do. Click the like and follow me on my social media.